FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And now that we have finished our pattern series, I've gotten a lot of feedback from you guys and you seem to like just having different types of series that covers specific topics. So what we're going to do is we're going to start a new series. This one essentially is going to be talking about specifically the exponential moving averages, the EMAs that we actually use in our charts. And what we're going to talk about is specifically which ones we use and why we use them. Because every single EMA that we have in our charts, it has to have a purpose. Every EMA has a purpose, and we're going to show you what that purpose is and how to use it in the next couple of videos with the EMA series. So without further ado guys, let's get this started. Alright guys, so what we're going to do is we're going to break down for you the 5 and 13 exponential moving averages. Alright, now with these two specific EMAs, depending on what kind of a trader you are, will determine how you actually use these two EMAs. If you're a conservative trader, you're going to use it in a specific way. If you're an aggressive trader, you're going to use them in a completely different way. So I like to call these our entry and exit EMAs, or EEs. Both of these EMAs simply allow us to have a confirmation on entry and then also on exits. Both the 5 and the 13 EMA can be used together to confirm entries. The 13 alone can also be used to confirm entry, again, depending on what kind of a trader you are. If you're a conservative trader, you're going to be using both the 5 and 13. If you're an aggressive trader, you're going to be using the 13 alone. The 5 EMA by itself can also be used to extend your position over your initial take profit. So let's say, for example, if you had a sell setup and you had a take profit at 30 pips. What if you wanted to get 35? What if you wanted to get 45? And you wanted to extend out that take profit longer than your initial 30 pip take profit? The 5 EMA is what you would use. And I'm going to show you a couple of examples of how to use that. Finally, these entry EMAs would only be used if you don't get a second leg pattern. So both the 5 and 13 EMA for entries would only be used if you do not get a second leg pattern, meaning a star pattern, railroad track, quarter wood on specifically the second leg. All right. So now that you have the basics here of the 5 and 13, let's take a look at some examples. All right, so what we have here is pound USD. All right, clearly you can see pound USD has essentially made an M pattern here. All right, this is what we call a type 2 pattern. Okay, now what are we looking at specifically with the EMAs? Well, the first thing I want you to notice is the pattern itself is a type 2. Okay, and you can see the 5 EMAs, the yellow, and the red is the 13 EMA. The 5 EMA and the 13 together can be used as an entry, meaning that when the 5 and the 13 cross each other, you can use that as an entry signal to enter the trade. All right, so for example, you can see if we go to the line chart real quick, you can see when the 5 and 13 cross each other, that's your signal to get into the trade or sell. All right. Now, very important, before you can even enter the trade, you obviously have to have pattern and other confirmations. I'm just specifically talking about the purpose of the 5 and 13. All right. Now, the 13 by itself could also be used as an entry in the sense of that if you don't want to wait for a 5 and 13 crossover to happen, you can just go ahead and enter in a trade after price action closes below or above the 13 EMA. So specifically in this example, if we zoom in, you're talking about basically on this candle right here. This candle closes below the 13 EMA. So after this candle essentially is your entry. Okay. Now, if you look at this dot here, this dot is basically telling you what candle is predicting the actual crossover. Okay, so if we look at a line chart, you can see the crossover happened up here, right? It happened right there. If we go ahead and put the candles back on, the crossover happened here. Why is the dot over here? Is what you may be asking yourself. The reason for that is because remember the EMAs are lagging indicators. So the actual crossover does not happen until you get this candle printing. Once this candle prints, that's when the actual crossover happens, and that's why the dot lit up. Okay, so your entry essentially would be after this candle, again, on a pullback. All right. Now, depending on what kind of a trader you are, will determine whether or not you wait for a 5 and 13 crossover or a close below the 13 EMA. If you're an aggressive trader, aggressive traders typically don't like to wait for a 5 and 13 crossover, which is fine, and they would typically use the close below the 13 EMA as their entry signal. For more conservative traders, they would like to wait for a 5 and 13 crossover, and then they would use that as their entry signal. So ultimately, it really just depends on what kind of a trader you are. Are you more conservative or are you more aggressive? Okay, so this is just one simple example of using the 5 and 13 crossover or just the close of the 13 for an entry on a pattern, on this, in this case being a type 2 pattern. Now, with using the 5 EMA by itself, right, let's say that you were going short on this, and let's say you're an aggressive trader, and let's say that this right here was your trade plan for this trade, right? You would get in on the pullback of this candle. Let me get this out of the way. You would get in on the pullback of this candle here, all right, and then go all the way down to, let's say, a 2-to-1 risk-to-reward ratio would be right here. So that would be about 33 pips or so. Okay, here's where the 5 comes into play. After you take the trade, if you're trying to ride it out as long as possible, all right, you would essentially wait until price closes back above the 5 EMA. So essentially on this candle here, price barely closes above the 5 EMA. So you would get out essentially here. So instead of taking profit here at 30, you'd get an essentially like another, 5, 7, or 8 pips or so. Okay, obviously every trade is going to be different. So, in other trade scenarios, this could be 50 pips extra, it could be 30 pips extra. It just depends. But this is an example of how you would use the 5 EMA to extend out your take profit point as long as possible. typically when you get a close above the 5 EMA, once you've passed your take profit point, price either is going to consolidate or reverse, okay, the majority of the time. All right, so that's how you would use the EMA 5 to extend out your take profits. The 13 EMA by itself, again, would be a close used as an entry signal. Once it closes, in this example, closes below once price action closes below the 13 EMA. And then if you're a more conservative trader, you'd have a 5 and 13 crossover here, and then you'd get into the trade on the next candle. So in this case here, this candle would be the crossover candle, and then the pullback would be where you get into the trade, and it'd be something like this, right? So that's a quick example of how you would use 5 and 13 crossover, the 13 EMA, and the 5 EMA. Again, these EMAs have a purpose. This is the only reason why the EMAs are used in our system that we use to trade. It's the only reason why they're there. That's it. All right. So here we have essentially we have a W pattern here, multi-session type 2 pattern. Okay. On the second leg, you could see we don't have a second leg pattern, meaning we don't have a second leg railroad track, star pattern, quarter wood, any of that stuff. So in this particular example, we would be using the EMAs to help us with our entry. Now, if we go back and we go back to this point here in time, we could see that if we go up to the line chart, the 5 and 13, which are basically the yellow is the 5, the 13 is the red, all right, we can see how they cross over each other right here on that big candle, essentially. So in this example here, you see how the line, the little yellow dot here points, is basically telling you that this candle is the candle that crosses over the 5 and 13, where the crossover happens. So this is a confirmation here for you to enter the trade. Now, typically we would wait for the next candle actually to do it and give us a pullback, because the pullback obviously gives us a better entry. So the trade setup itself would look something like this: 2-to-1 risk to reward ratio, 39 pips take profit, and stop loss right below the low, obviously, so about 20 pips stop loss, give or take. All right. Now, as we play this through, right, there's your take profit that was hit. And then let's just say that this is how you would use the 5 EMA by itself. Let's say that you don't have a take profit set here like to automatically take you out of the trade, but you want to extend out as much as possible, and try to get as many pips as possible out of this particular trade. So if you keep going with this, you'll see that right here is when the actual price action closes below the 5 EMA. This right here is where you would get out and use basically the 5 EMA to extend out your take profit. So your take profit originally would have been 40 pips. However, if you use the 5 EMA to extend it out further, you're looking at 59 pips. So about a 20 pip jump that you would have gotten just by following the 5 EMA. Okay, so the price action itself closing below the 5 EMA is a trigger to get out of the trade. All right, and then you'd be done. So in this example, this would be a good example for a 5 and 13 crossover. All right, let me show you another example here on a different pair where we can talk about the difference between just a 5 and 13 crossover versus the actual just 13 close. All right, so as we're looking at pound NZD, this obviously is a type 2 pattern that's pinning to the bottom of the Asian range, which is right here. So this is a type 2 pattern W, and what we're looking at here is going to be the difference between a conservative trader and also versus an aggressive trader. So in this case here, we have an aggressive trader that would basically enter the trade after this candle, because after this candle is when you see the close of the 13. Price action closed above the 13. You see that we don't have any kind of a star pattern or railroad tracks or quarter wood or any of that stuff. So again, you would use, if you're an aggressive trader, you'd get into the actual trade after this candle, essentially on this pullback here, right? So anywhere on this pullback would be your entry, and then your trade setup would look something like this. Okay. Now, if you're a conservative trader and you're waiting for a 5 and 13 crossover, what would happen is you see the dot here. The dot indicates that this candle is the crossover candle. The next candle after that on the pullback is where you would get in. So that's the difference between an aggressive and a more conservative trader. All right. Obviously, these candles are pretty big on pound and ZD. I believe these are like, yeah, these are close to 30 pip candles. So on a regular pair like Euro USD, these might look big, but they're really not in pip wise, pip value wise. So it'll look a little bit different on those particular pairs. So I hope showing you these two examples gave you a better idea as to what you should look for when using the 5 and 13 EMAs on your charts. All right. So I hope that this series that we talk about EMAs is going to bring you more in-depth analysis on how to use specifically the different EMAs on your charts. With that being said, guys, thank you so much and have a great rest of your day. Guys, if you need any more help, please check out FXN Plus. That is literally where you could see my charts on a daily basis. You'll get access to the Blueprint Summit videos. It's 9 sessions over 14 hours. You get access to group sessions every single week that we do on Sundays. You can ask as many questions as you want. It brings a lot of value for you guys. There's about 1 more week left where you're able to get included with your subscription the Blueprint videos. Okay, so if you sign up before then, you will always have access to the Blueprint videos as long as you have FXN Plus as a subscription service. You'll have them for life as long as you're on the subscription. All right, so if you have any other questions, guys, just let us know. But thank you so much. Trade smart and trade consistent.